Hello and welcome to Edukemy's YouTube channel and editorial discussion for 13th May 2022. My name is Harsh Singh and in this video we shall discuss an editorial from today's Indian Express which is titled Don't Leave It to RBI. The editorial primarily speaks of the causes of inflation in the economy, how RBI is trying to control it and contain it, and what should be ideally done is in a situation like this. An important editorial from the perspective of GS Paper 3 Economy. And if you like this initiative, share some love through likes, comments and shares. Let's discuss. The editorial begins by saying that RBI has gone to increase the repo rate and increase the cash reserve ratio. All of them are supposed to cut back the excess liquidity in the economy, which RBI has been injecting in the last 3 to 4 years, right? And this is also supposed to curb and control the inflation in the economy. Right now, wholesale price index exceeding 12% and consumer price index exceeding to 7 to 8% in the country. And this is how RBI thinks this is going to bring down the inflation levels in the country. See, there are three main ways the editorial says in which inflation can be controlled and tamed. The one is setting expectations. The Reserve Bank, the central bank of the country itself should go ahead by committing some things and being on its own actions, right, which should indicate that they want to control down the inflation. One example is indexed bonds, inflation indexed bonds, but these tendencies are very few in our country. The second is having high interest rates in the country so that FDI comes, so that foreign capital comes in the country. See how this is an indirect one, but how it happens is something like this. If we are having high interest rates, then dollars would pour in the economy because they know that higher interest rates will be given to dollars deposited in the country. If this happens, our currency will appreciate, will not depreciate, it will appreciate. And when the currency appreciates, then our imports are cheaper. If imports are cheaper, those economies which are importing more will have the advantage, right? Because the import cost of items will not be high. This is the policy that is largely used in countries like Argentina, Brazil, where the food imports are very high. However, this policy is again not very effective in our country. The third is curbing the credit growth at all in the economy and its transmission. So if we have lesser finances, lesser mobilization of the finances, this can be the way out in a hot economy. For example, US economy, which is very hot right now. So if we decrease the amount of money presence, then we will be able to control down the prices of the cost as well. Demand will also be less. But is that the situation in India? No, that is not the situation in the country. Inflation is not getting caused because of high rigor in the economy. In fact, we have barely recovered from the global crisis of pandemic. We have barely recovered the economy, especially. What is causing this inflation right now are the higher food prices, whatever we import, those items, and commodity prices that we are importing, be it fuel, be it food, be it fertilizers, be it other commodities, chip, etc. There are supply chain disruptions in the economy. Has it happened because of the constraints in demand side? No, demand has not picked up in the economy. See, while the demand is low in India's economy, there is supply side constraint in the economy. That is the issue. And we also have a huge informal base presence of the vulnerable sections. Everybody is demanding product, but then and demand is also not very high. Demand for some products is high, but then not overall. The overall demand is not very high. Now, this is where formalization of economy has caused an impact. For example, if earlier the economy for vegetable sellers was informal and now we have a formal economy for vegetable sellers, this is increasing the transaction cost. The GST in the way or moving goods from one place to another is increasing the cost of transaction. And all of these factors, none of these factors have been affected because of supply of money or non-supply of money. These inflationary tendencies at these places are supply side. They need certain other kind of reformations and not tightening the monetary policy. Yes, we need to tighten the monetary policy to remove the excess liquidity. That is absolutely true. But then having these high interest rates would only slow down the GDP and the recovery of the economy. So what is required then? If this is not the step, if RBI step is not the sufficient step, what is required? We need to bring down the geopolitical tensions, and primarily the one in Eastern Europe, Ukraine and Russia. The second one is we if possible, if we could do this, we must change the zero COVID policy of China, because China happens to be one of those leaders which is a part of supply chain management. Then the third is providing more reforms from the government sides, providing incentives to those sectors which are potent, which can do well in the country. Simple example is auto sector, which can export devices, the battery sector, the clean energy sector, similarly chip designing sector. All of these need more support. And the fourth is repair the disrupted domestic supply chain. See, if we do this, if we put our finances here, that will be at the right place. Rather than controlling the finance and the economy, if we put them at the right places, that will be the right way to go about. So this is a very important editorial from understanding the perspective of RBI and what should be done. So if RBI has controlled or clamped down on inflation levels by increasing the repo rates and other rates, that's fine. But then the government also must step up and provide more incentives in these forms, or have diplomacy in these forms, which will help controlling down the supply side inflation. Very important. Very important editorial. Now, if you have some questions, please put it down in the comment section. And a quick question to you: mention 5 items facing inflation in the country and the reasons for those inflation. If you like this initiative, share some love through likes, comments, and shares. Thank you for watching.